Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Tuesday, the 12th of February. Yesterday was a little bit on the dull side. Today, not so much, as we saw the market gap up on the open and for the most part run till the late part in the day. And hey, Jim, great to see you, my friend. I'm glad you're able to make it here live. And hello, Marie. Always a pleasure to see you. I hope everybody had a great day, both in and out of the market. Definitely was a bullish day, as pretty much everything closed in the green, except maybe real estate, a little profit taking over there, but nothing too terribly dramatic. We have, of course, a handful of earnings coming out tonight and tomorrow, including Activision Blizzard's coming out tonight. It looked like, and I just caught it about 2 minutes before I hopped on here, so I didn't get a chance to dig. I'm looking very much forward to it. But it looks like they beat on earnings, missed on revenue, and guidance was a little bit light. So we'll have to see. It was a little back and forth in the early after-hour trading. So long time between now and tomorrow morning. But one of my favorite companies for lots of reasons. I guess as far as interest goes. We also have things like Dish coming out tomorrow before the open. So, and I think all in all, there's about a dozen S&P 500 companies coming out before the bell between tonight and, of course, tomorrow morning. So Dish, Activision, Blizzard, maybe the more recognizable names within that bunch here. So, and welcome everybody. Great to see you guys as always. Thank you so much for joining me. It's always fun to do my daily routine with friends. So hi, Patricia. How are you today? Over in the S&P, and really this is pretty much what the market looks like here today. You know, we have some optimism on government shutdown deal, and we gap up on the open, and we really just were able to kind of keep churning upwards throughout most of the day. Now, late day, you did see a little bit of a slowdown, a little bit of profit taking, not really going anywhere, maybe the last hour and a half, 2 hours of the trading day. But really, you know, pretty much from start to finish, almost a pretty bullish day in the market. And yeah, you're absolutely right, Justin. And hello, my friend. Definitely a bullish day. As you look at the S&P over on the daily time frame, we were able to run through that resistance, that previous swing high. We were able to take that out today, kind of closing right there on that line of the 200-day moving average. Did it break it? Did it not? It is so darn close that probably your bias will determine whether or not you think it did. So we'll be keeping an eye on that. Not overly concerned, honestly, but again, I feel a lot better if we close a little bit above it today at the same time. Next up, probably for me, we talked about it a lot. Not just here, but in a lot of places together. 2,800 is probably the next real challenge. Especially if we can take out this 200. And we'll see. We seem to have the momentum. Yeah, absolutely. It was if you were bored, it was a good some cold water early this morning. So keep an eye on how we respond to that. Like I said, you may or may not be more concerned than I am. I'm not overly concerned with it being so flat. But again, I would have preferred that we were able to cleanly close it. But we'll have to wait for at least one more day over there. On the NASDAQ, not quite able to catch that same momentum that we saw on the S&P. We were close. We had a good day. Nothing really wrong or anything along those lines. But weren't able to work into our old highs. Weren't able to work into that flatline 200-period moving average. So a little bit, relatively speaking, and then this is really being nitpicky here, but a little weaker than the S&P, I guess, today, without being able to challenge and take out that previous swing. Definitely some nice movement. I definitely think we talked about it yesterday, whether or not we could call the low that we put in on Friday as support. Yesterday, I wanted to see a little bit of movement. I feel very comfortable saying this is where we should not go below now from a bullish point of view. As we look at these, these lows from Friday across the board, I'm calling them support, and that is how I will be treating the market for the foreseeable future with this upward movement. Definitely seeing buyers come off of these prices, no doubt about it. Over in the Dow Jones, pretty exciting times over there as well. Definitely a nice big candle, up almost 1.5%, closing right at that previous swing high. Of course, we're above everything in regards to moving averages over in the Dow Jones, unlike the NASDAQ and the S&P, closing right at resistance. Again, I don't expect this to be a major level of resistance if we can take it out. Realistically, this one's a little bit tougher because we're going to our high here. Are we going to our high here? Are we going to our high here? You know, I'm not exactly sure. I'm going to be kind of eyeballing right around that 25.8, right about where I have my line set up right here, these old tops as that next potential level of resistance for a profit-taking zone or something along those lines. But I do expect there to be a little more room to the upside over in the Dow Jones as well. And that's, you know, we talk about this a lot here because that's the way my brain works. You know, there's space, there's room for these things. If we can carry through this momentum, breaking these resistance levels, to me at least, it looks like there is still some room to run before we, you know, those are pretty significant challenges that we have not too far away from us, but we've got some room between here and there. RUT continues to perform very nicely, been a very clean chart, right? We talked about this a few times. 1550, probably something that we want to keep our eyes out for. That's going to put us in line with this old pivot, nice round number. We definitely have seen some price action there. In days gone by, we know that the market does have a tendency to like nice round numbers. So we're pretty close to a potential challenge, in my opinion, in the Russell, continuing to show great strength. What can you say? Definitely a nice index from a bullish point of view, at least as of late. 1550, I would suspect to be a fight, so we'll have to see how that goes once we get to that. That should be an interesting battle, one way or the other. So, and good afternoon, Lorena and Tanner. Great to see you guys. Always fun. I've went through this process for a long time by myself. It's a lot more fun to do it with friends. So, thanks for hanging out with me. As we kind of shift into the sector side of things, materials finally popping here today, up over 2% after really kind of just back and forth hanging around. They're almost like my youngest brother. I have 3 younger brothers, and my youngest brother, you know, he always needs a little prodding. And it feels like every time I start to complain about the materials, then they finally start to move. I'm just going to have to start complaining more. I don't know. But we did see some nice movement over here today, working into some resistance. Again, overall, as long as we're above 52, I do think you continue to look at it bullish. I think a break of that resistance is going to be a nice signal. We still have some room. I know it doesn't maybe look like it on the ETF, but we still have some room between where we are and some resistance level. Still would like to see it come out of this range, but as we've kind of talked before, what I want is fine. It's okay to want what I want, right? But it's also important to look at things objectively, and the bullish signals are still here intact in the material sector, and definitely a nice move here today over there. Finally a nice day. Energy was not really able to get in on the action here today. Much like everything else, we were able to gap on the open, but really no follow through whatsoever. My primary suspicions is, we're at a major resistance level, or right below a major resistance level. And so for me, and again, I may be wrong, but for me, I wouldn't buy this until that breaks. And so that is, of course, the bias that I'm bringing to the energy sector, pushing a little bit closer to a potential test, no doubt about it. We all, kind of know how I feel on the energy sector and how afraid of that old level I am, and how excited about, I will be if and when we're able to break through that. I do think that is going to be a very nice bullish signal if and when it happens, but hasn't happened today. I do think we've established a short-term support level down here at 62. So this 62 to 65 zone should probably, at least in my mind, be our trading range. And eventually one side's going to win. All right, seasonality says it's probably the bulls. We'll have to wait and see and let that battle play out. But a lot of back and forth. Again, we remember these prices, right? So over in the financials, nice solid day. They've kind of been a little bit choppy these last couple of days. I got in on the action today, pretty decent day, closing up almost 1.5%. Not taking out resistance, in my opinion, at least, but definitely nice to see them kind of get into the swing of things with some of the other areas in the market been a little bit lagging behind, maybe in the very short term. We know how I feel. I think you guys probably, to a certain degree, probably believe this as well. that 2650 ballpark area where we had that major support zone is a little bit of a resistance area kind of looming above us, making us think about things, so that's breaking through that. I'm going to feel a lot better individually, is often the case. I would not be opposed to an individual financial stock, if something was breaking out like an AFL or something along those lines. But collectively, I'm going to feel a lot more bullish about this sector. And I think I like it more than some of the other coaches here at Tackle Trading. But I'm going to feel a lot better if we can take out that resistance zone. We've already seen some price movement down off of that general ballpark. We're about to challenge it again. Maybe we break it tomorrow. Maybe we don't. But I'm looking forward to seeing it challenge it, if nothing else. We don't have to worry about those things in the industrial sector because everything that is a challenge is just fun for the industrial sector these days. Anything that looks like it may be a challenge is taken out fairly easily, and today is no exception. Taking out that previous pivot point, there's, in my mind, nothing between where we are and up in the $77 range. Now, do I expect it to, rocket straight up there? No, but to be honest, it's kind of been doing that stuff, so I shouldn't be terribly surprised if it does. But I do consider this a very bullish signal. Even if we were to pull back and not able to hold this breakout, say as early as tomorrow, I'd be very interested in a pullback opportunity. I do feel like that is a pretty good signal. Don't feel like we have a lot of resistance for a few dollars. And on the ETF, that can really translate to some movement on the individual stocks. We all know how Boeing's doing, but you saw DHI breakout today. Definitely a lot of strength going on, continually over in this sector. So really just more of the same as we look at the industrial sector. It has just been impressive. Tech lagging a little bit behind, much like the NASDAQ wasn't able to break through its resistance level. Tech kind of ran right up there and called it good. So we'll have to wait one more day to see if we can get. Now, over in tech, one of the drawbacks, and again, this is a minor thing maybe, but we do have lots of little things. We've got the swing high along with the 200 flat, but it's there. We've seen it at least short-term act as resistance catalyst, right? Just as recently as last week in the broad market. Beyond that, we've got a little bit here. Now, overall, these aren't what I would consider major challenges until we get into this 72, if we can take out this one that we're working with right now. But definitely some things that we'll want to be keeping our eyes on. I think there's room, there's little challenges, not super strong levels of resistance maybe, but things that might catch an individual trader's attention, much like we're seeing over in the discretionary sector. Maybe not quite so pronounced though, but a good solid day. We weren't able to break resistance, not follow through wasn't maybe there like it was in industrials, but we can't judge a sector based off of how much better industrial looks to it these days, because that's not really all that fair, I don't think. Over in staples, a very interesting close, working up into that old trend line that I have been, keeping an eye on. We did sell off of our highs, and not a lot, but not a little bit either. We did come off of those highs fairly nicely, the second half of the trading day. Of course, I'm not sold, me, but that is just me. We are right there. If we're able to push through that, get that follow through as early as tomorrow, I could feel comfortable. Now, what that would probably more realistically mean, I'd be looking for pullbacks or breakouts in the sector and not looking to go crazy in the sector tomorrow if we are able to continue this momentum. But I'll have to, that will really kind of get rid of what's been a concern to me. Beyond that, we do have some old price history at around 55 and a quarter or so. It was basically a double or a triple top breakout, last fall. So that'll be a price point probably to keep our eyes on from a technical point of view. But one day in, it didn't seem to care too much about that trend line, not even on a short-term level, as this area also continues to remain pretty darn bullish, my fears aside. So, and that's why you go with what you see. It's fine to be afraid and like some things more than others, right? It's not fine to go against everything that you're seeing because you're a win. Definitely a good lesson that I had to learn a few times. So over in utilities, a little bit of a back and forth day. Still continuing that bullish momentum. Still, in my opinion, all signals are still bullish over in this sector. but a little bit of back and forth now these last couple of trading days. Maybe it's just a little consolidation period. Maybe it wants to pull back. I'm not sure. I'll be watching that 55 zone as the primary support level as we move forward. Maybe it just needs to take 5 until we work, catch up with these short-term moving averages that can give it a push. There's still a lot of room overall in my mind in the utility sector. I know it's not the most exciting sector out there, at least in my mind it isn't, but there is still room over here, so holding support, building higher highs and higher lows above all our moving averages, not a lot of overhead for a little while till we get to 57 on the ETF. So I have a hard time saying that I don't like utilities. You have to like what you see there. Big solid day over for the healthcare sector as well, working right into that resistance level. You guys know how I generally view this sector, but we'll talk about it one more time. A little bit of a break of this. There's a lot of space over here in my mind, and I'm going to like it for better or worse. Taking that out is going to be, yet another bullish signal. We've really not generated sell signals. We've been a little sideways through last week's earnings as I was trying to figure out what to make of it all, but it never really decided. So back into the technicals here, and technicals are definitely on the bullish side right now. A break, and we're there. I mean, we closed right at that resistance. There's, again, not a lot, in my opinion, just not a lot between that break and our next level of resistance, which I will definitely respect at that 90, this 93 ballpark. That was a big price point, in the not too distant past. But between, where we are, assuming we can take this resistance level out, not a whole lot that I can see, at least, to slow us down. So kind of looks like, a little bit slower industrial or tech sector to me, where it hasn't broken out yet, but once it did and there wasn't anything, kind of standing in its way, had a relatively easy run filling up that space. So we'll see if that's the way the healthcare sector plays out. That's definitely how I'm going to be looking at it over the next couple of days, especially if we can break that resistance. I probably shouldn't assume it's going to break that resistance, but I kind of expect it to. I won't do anything until I see it, of course. Really interesting development over in the discretionary. Of course, it got in on the action today, and this is such a mixed bag. Some of these charts are really nice. The dollar store companies really, stand out, but some of them not so much. But we've seen this intraday, area on several different occasions. If you go look at it on a shorter time frame, I mean, look at this thing as it's been trying to build up. This is the type of thing I'm always looking for, something that's established, multiple failures at the same level of support or resistance, building up that pressure. If we can take it out, should be some oomph behind it. It is still using that same level of intraday resistance that it's been using now for over a week. We're seeing a lot of reaction to that price point. Lots of little overhead. We've talked about this a lot, really the whole way, right? Really since we kind of broke out, initially we had this, then we had that, and it's just, one thing after another. And we will have, a little bit of a challenge not too far ahead of us if we can take out that resistance level. I do think, much like the rest of the market, we've now seen some pretty, impressive short-term price appreciation off of those Friday lows. For me, and we talked about it on the indexes, but for the most part, it's, working right down into the sectors too. That, for me, is now swing support. That breaks, that is going to be a bearish signal. Not that I expect it to, but that would be, in my mind, a bearish signal. And not just on this, just on any chart that looks like this, would always be the way that I would treat that. So good day, got in on the action. Hey, it was hard to have a bad day today, but you still have to appreciate things that got in on the action and had a good day, right? Just because not everybody was the material sector today doesn't mean you can't appreciate what they did. So right at resistance over there, a little bit more movement, probably have a little bit more movement behind it. Over in real estate, we're just not quite sure. We're very extended, but we're so strong, we're just not developing the pullback. That doesn't mean it can't happen, but even today, working down into the 9 EMA and then, jumping right off of it, this is definitely one of the more bearish candlesticks we've seen recently over in the real estate sector, but it's hard to look at this chart and say bearish. At least for me, it is. It's very extended. Maybe it just needs to take some time, right? I think a pullback would be healthy. I just don't know that it wants to pull back. And I'm not going to bet against it by any stretch of the imagination. There still is room. We might just be in one of those consolidation periods. A lot of the stocks that we've talked about before have already broken their resistance level. It was just such a V-shaped recovery, right? I mean, this overall, the market was a pretty V-shaped recovery, but we talked about, this. I mean, this guy zoom, 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 right? And now other areas are showing maybe, some interesting signals. So maybe it's just a little bit of a rotation thing as we kind of, shake this one out a little bit. Having a hard time doing anything right now, which usually, means it's kind of, one of those high base type of situations. I know it's not maybe a textbook of that because we're kind of inching away into new highs every other day or so, but really pretty flat over in this area within, overall some very, very strong movers. And over in communication services, Take-Two Gaming was one of the big losers on the day, kind of dragging things down, not able to get in on the action today. And again, this is kind of a weird sector in my mind because some of the things aren't quite as related to one another as I think they should be. Whether I'm right or not, I don't know, but definitely the way that I feel. But not able to get in, really kick in over here today. Yeah, we closed up, but we gapped up just like everything, right? I don't love that. But again, looking at this sector in particular, this isn't the type of thing I'm going to use this, ETF as the vehicle. Whereas I might use the ETF in the healthcare sector as a vehicle. I'd be comfortable with that. I wouldn't feel very comfortable if I like this sector. That's fine. I'm going to be, picking the individual components as opposed to the ETF, because again, right or wrong, I don't really get it. So at least not yet. I get it. They're all kind of techie type of things, but I don't get it. Verizon, Activision Blizzard, Facebook. I mean, if they're all tech, I guess that kind of makes sense. So maybe it should make more sense to me. I don't know. But what I do know is they really weren't able to build that momentum that so many other areas in the market were. We weren't even able to take out yesterday's high, which was happening pretty regularly across the board. I do think we can use this swing as a support level. So as long as we do stay above that, I feel like we can be looking this overall bullish. But again, I'll be looking at the individual components and working with them as I believe that I should, as opposed to kind of going with this ETF. At least today and right now, maybe I'll learn to love it. I haven't learned to love it just yet. So pretty solid day. As you can see, most things carrying on that momentum from Friday. We saw a little carryover yesterday, just not much price action. Well, today was definitely the day. So the big takeaway for me is support. These lows that we did put in on Friday, I feel like we can look at those as serious short-term levels of support. If we're bullish, we should not go below those levels, in my opinion. And I think that's the big takeaway technically today for me. As we kind of shift into our volatility index, as expected, not a whole lot happening over here. We're just in a relatively speaking mellow place, right, in the market. Even on down days, we're not seeing big spikes. Traders are feeling comfortable. How long will that last? Time will tell. But right now, they are continuing to feel comfortable. And a nice bullish day like today, no surprises. The VIX is still hanging out where it has been. Over in gold, we're doing this little consolidation dance. I know Matt wants it to pull back closer to 13, and he's starting to feel like it won't. Don't feel that way yet, right? It hasn't broke anything one way or the other just yet. But we're really going into a little bit of a sideways range. I think that is perfectly fine, maybe even preferable as for new potential trades, at least swing trades over in gold in the days to come. I would like to see it work its way a little bit lower, but I may or may not get that. We have really kind of established a little bit of a trading range on the intraday over the last several trading days. Maybe going to an hourly chart to see this. We really have kind of went into this nice sideways range. A break above that 1320 zone should be a little bit of a short-term buy signal. I think I would prefer, a pullback signal, but again, I can ask, but I can't assume. But we have established a pretty good little trading range over in gold over the last 4 or so trading days. Not really much to see here. Probably feeling the exact same way about it yet today as you were yesterday. I can't really see any reason why you would have technically changed your opinion. Interesting things happening over silver too, much like gold, where we've kind of developed that range. On gold, we've kind of developed on the top at around that 1320. On silver, we're actually developing it on the bottom, on the floor. We're really establishing a pretty solid little intraday floor zone during the same general time period. Not really seeing the turnaround signals yet. Not seeing a ton of strength in here by any means. Doesn't mean we're seeing weakness. Just right now, we really are. If we think about where we're at, really, we were in a pullback, and it looked like maybe folks were going to jump right back in on the pullback, late last week, and just wasn't ready, right? And that doesn't mean anything's wrong with it. We're certainly, in my mind, aren't seeing sell signals, but we've gone into a little bit of a short-term consolidation range, a break above this resistance level up here at around 1580. I could see someone making a case that that is a bullish entry point, and I really wouldn't put up much of a fight if someone were to do so. My biggest question would be, how do you feel about that resistance? That old floor, that new ceiling, there's not a lot of risk to reward there, in my opinion, at least, if you're worried about that. I still feel like, and again, we hang out on this floor for a little while longer, maybe that can change my opinion. I still feel like the break is a better trading opportunity in silver right now. But again, if we spend another week building this floor, the right buy signal could definitely change my mind on the pullback. If we can get closer right now, just having to break resistance up here, just risk to reward, it seems going to be tough to pull off. But if we actually trustfully buy it, and I wouldn't bet against silver right now or gold. If we could buy it right here, then the risk reward would be there regardless of what we thought about that resistance level. But I don't think those signals are here just yet. But very interestingly, we are putting together a little bit of an intraday floor over the last week of trading. Definitely something to keep an eye on. If we do break that, probably should expect a little more selling, maybe working back into some of these averages. I don't really expect it, but that doesn't mean it won't happen. So not a lot changing here today. Our metal's kind of going into the sideways breather type of situation. And thank you, Jim. I appreciate that. It's always my pleasure. I'm a big believer in this process. It took me a while to kind of find my routine in the market. And for me, this, going through this process helped me kind of decide, okay, how do I want to manage things? What new areas do I want to look to do? It really just, it's something I really believe in. I try to get everybody to do it. So I'm glad that you're finding it helpful, my friend, and it is absolutely my pleasure to help you with it. So not a lot to see here in metals, little sideways action though. Over in natty gas, well, hanging out below the 9 EMA, I guess you could say that. Not a lot here to see. We are kind of continuing to use this same old little floor zone as a little bit of resistance. Of course, we are below all of our moving average, including that short-term at 9 EMA, so no real buy signals, but it's still natural gas. I still don't feel like there's a great trading setup in this area. I do feel like there's could be something that develops at that 250 mark. We'll just have to see. We'll just have to see if and when we get there. If you are or wanting to be bullish on this, you're braver than me. So, but keep an eye on these shorter term averages. Probably doesn't look like, it might go up a lot tomorrow, but that doesn't mean it's, in my opinion, at least a good bullish trade. We can keep an eye on these shorter term averages to look for some turnover if we are bullish to see some sort of change in momentum. Right now, it's still a stay away for me. One of these days, and I do look forward to it. I know it will happen. I just don't know when. There's going to be something really nice here. And today, I just don't feel like is that day. But are closing right below that old floor, using that falling 9 EMA as a little bit of resistance in the shorter term. So, yeah, me as well, Maureen. Thank you for saying that, because it does for me as well. I tell everybody, all the new traders I talk to, the market's like a soap opera. And if you watch every day, you're always comfortable. You always kind of have an idea of what you expect for tomorrow's episode. You're not always right, but you're always pretty on top of it. But if you don't tune in every day, you get lost in the shuffle. And so I agree with you 100% there, Marie. That's why this process helps me, because I think about the market as just a bunch of stories. And if I make a little time for them each and every day, I always feel like I know the characters, their motivations, their enemies, their backstories. And sometimes there's an evil twin brother episode, right? Where, wow, I did not see that coming. That does, of course, happen. But most of the time, tomorrow's kind of just an extension of today, right? So at least that's the way I view, following the markets. I think about it like a giant story. Over in the dollar, 97.1, at least for today. Now, we've seen this area. We talked about it yesterday, but many of us were talking about it last fall, early winter. That 97 is a number that definitely we've seen some movement off of. And at least today, we saw more movement to the downside. Now, I don't necessarily think that's a bullish signal, but I'm not also at the same time very surprised. Now, it doesn't mean I did anything with it, because I did not. But I'm not terribly surprised at that resistance. I mean, we had a heck of a bullish run coming off of that 200. That was kind of an evil twin brother thing, right? Where, wow, we went from, being bearish to basically a W without a whole lot of catalysts, really, just because the dollar's maybe better than some other things. Really, whatever the reasons were, very good run. Interesting kind of price action within the candle, kind of using that old resistance as support here today. This is kind of the range, and we, some of us, probably do remember. I know not all of you were, with us in the market recap back then, but we saw some things in this price zone happen day to day several times. So, keep an eye on these two zones. Break above, another buy signal. Break below, I wouldn't call it a sell signal. I wouldn't call it a bearish signal. I would call it a sell signal. And if that makes sense, I don't think I wouldn't go short if we broke that support level, but I would be looking for a little bit of a deeper pullback if we do take out that support level. It's been interesting in the dollar, still within that range, and really as much fun as it is to kind of see the the day-to-day price movement, when it comes to this stuff for me, and especially currencies, but really in general. The bigger picture is we are still in the range, right? We haven't really come out of that range. There's some interesting stuff that happens day to day. Some of it's really interesting. Some of it's kind of boring, but still very much within that trading range. And of course, we don't want to forget our friends over in the crude oil. We saw that hammer develop yesterday, talked about, more aggressive methodology could be moving in, taking out that high. At least on some level, that did happen today. Now, I still feel a lot more comfortable on the break, and I'm willing to wait for the break, and whoever buys the pullback, if it does work into that resistance and break it, I'll be very happy for you. I still need to see the break of resistance or that 50 handle at support to give me the signal that I'm looking for. I still feel like overall these guys are in a sideways range, but I do, like I said yesterday, I get the argument if folks are looking to buy in off of the pullback. If you are bullish, there is room from where we are, and especially, going yesterday, but even today, there's still some room until that resistance level. So probably depends on you. If you're bearish, you're probably not doing anything just yet. If you're more conservative bull like I am, you're probably waiting for the break. If you're more aggressive bull, you may already be in this pullback, or you may be looking to move in off of this pullback. I would understand that methodology. I just wouldn't agree with it for myself. We're still in that range. One of these days, we will come out of it. But I do think, that if you had to, guess, and I don't know, it's fun to do just as long as it doesn't count, right? If I had to guess, I would lean a little to the bullish side. But luckily, I don't have to do that. That is kind of what I'm watching for, more so than the break to the downside. But that doesn't mean anything, because there's no consequences either way. So, I think our numbers are still the same over in crude. So, and I think Cody, after their earnings, I think I saw they had an upgrade somewhere, and I'm not exactly sure who upgraded them. I don't follow them. I saw them move yesterday, but I think they were upgraded by somebody here this morning, because this was their earnings, if I'm not mistaken. Had one heck of an earnings report, and then okay, so the news was they've got an investor, consumer brand investor, Jab Holding, upping their stake. So yeah, I don't know a whole lot about that. I don't follow these guys. Maybe I'm going to start though. Not for a trade right now, but you have to, that type of movement does get your attention, doesn't it? Interesting gap right into that 200 and a little bit of profit taking, but who could blame them? Two gaps, back to back. So, that gap. Yeah, that news gap definitely got you. Yeah, I don't know a whole lot about this Jab consumer investor, consumer investor brands going on, but somebody clearly likes it. Yeah, that's I'm not a short strangle guy as a general rule. I'm too big of a wimp. I get it, and I understand why people do it, and I don't really argue against them. I know their methodology is sound. I'm just I'm just a wimp. So, and always have been, but definitely some serious profit taking off of that 200, and fair enough, right? I know I would have considered doing that if I were, for whatever reason, in these guys. I probably wouldn't be, because I wouldn't have been through earnings, wouldn't have dared buy the day after earnings, and would have said, "Hey, how you doing?" But definitely some movement over there. There were, I want to say, 43 S&P 500 companies that hit new 52-week highs today. I mean, we're definitely seeing some bulls. TWO, Take Two was the only S&P 500 company, I believe, that hit new lows. So bulls are definitely in charge right now. They do have the momentum. We've got little levels of resistance, hanging around in the NASDAQ, in the S&P, that maybe haven't, and the Dow. We kind of closed right at or very near those swing levels of resistance. So we should probably keep an eye on them. Beyond that, there probably is a little bit more room to run in this market before, the next wave is going to be, I'm going to be taking a little more serious. Those highs that we ran into in the market after we had our big sell-off and went into that nice sideways range, 2,800 on the S&P, I'm going to be treating that one with a lot of respect. I'm going to be saying, hedge your long positions, and at least I'm going to be telling myself to do that when we work into that area. Take some profits. That is going to be a zone that I am going to be leery of from a bullish point of view. Until then, I'm not going to be all that concerned unless we break that support that we've now, in my opinion at least, established through nice upward movement in price. So that is where we find ourselves, ladies and gentlemen, after a very dull day yesterday. Today, definitely making up for lost time. So that's going to do us for today's market recap, guys. But as always, it is certainly my pleasure, and I do appreciate everybody's time. It's great to have you guys in here with me. I benefit from it too, 100%. So I'm happy to do it with you guys, because it is, it's been an interesting exercise for me, because I've done this for a long time, but I've done it in my head. I'm not talked it out, if you will, because I've kind of done it on my own. So I feel like I'm getting, getting some good quality value out of it myself. So thank you for that. It's always great to have you guys with me, and thank you so much for your time. If you are new around here, be sure to hit that subscribe button and that notification bell, and be sure to join us over at Tackle Trading on Twitter as well. You can holler at me over on Twitter at FrankMartin23. If you haven't been added to our Twitter community list just yet, just find me. I'll be happy to get you added over there. If you have anything you guys would like to add, whether you're watching this later tonight or whatever, feel free to give us comments in the comment section below. We always love to get the take of other traders. So always interested in that. Never feel like we don't. I always want your opinion. I love talking through this stuff. So if you enjoy the market recap, guys, it is always helpful and appreciated if you do give it a thumbs up. That helps us with the YouTube algorithm, get the message out, and to know that it's helpful for you, and that's always important to me. With that, ladies and gentlemen, hey, thank you guys so much. It is my pleasure. You guys all have a wonderful Tuesday afternoon. Enjoy the coaches show here tonight. If you're not a pro member of Team Tackle, head on over to Tackle Trading and try out that 15-day free trial. Come see what it's all about. I think you'll love it. If I know many of you guys are, so if maybe I'll be seeing you in the coaches show. If not, I'll see you guys here tomorrow, same time, same channel. So yeah, there we go. Thank you, Marie. All right, guys, get the heck out of here. Have a wonderful Tuesday afternoon. Get ready for tomorrow, and I will see you then. Good night, everyone.